Everyone, welcome to Top Trading Age. Today we will be take a look at the Tesla and Apple. Tesla had the earning and the Apple also had the earning after Tesla. And what I noticed on social media where nobody's talking about what exactly happened to the Tesla. Everybody tried to join uh, their their news or whatever the headline they read, and they try to mix that Tesla went down because their forecast was not good, or maybe it broke the support, or maybe uh, the price is too high, or maybe the Fed is tightening the screw, so that's why the Tesla price is going down. So several connection to uh, people are trying to fit with all the probabilities, but nobody's talking about what I'm going to talk today, and we will definitely talk about all the dots, and then you'll believe that these are the games normally happens in the market, and we got to learn out of that and not to repeat those mistakes. So we'll talk about that in this video, comparing Tesla and Apple earnings. Before we start, let's um, go to the disclaimer. This video is for education purpose only. I do not sell any financial advice or a recommendation to buy or sell any sort of stocks or investments. For your financial action, please consult with a professional financial advisor before making any financial decision. Okay, let's get started. So first, we're going to take a look at it here, technical analysis. There are few things we need to look. Every company earnings based on not just technical analysis. There is a financial fundamental analysis also, and then there is a geopolitical analysis. So in this case, we're going to start with just a small earning, what exactly happened. So if you take a look at the EPS was expected $2.36, and they achieved $2.54. So it's positive, 7.5% up. Same thing here, the revenue, $17 billion revenue expected, 17.13, and they reported 17.71. So it's positive. So both these are the it was positive. So everybody was shocked what happened. But nobody is talking about what exactly happened, and I'm gonna try to display it here what happened. So we have to start with the first beginning of what happened. So these are the double top happened, and then the Tesla was selling since before earning. Earning was right here, which was on January 26th. But the sell-off started when it's a double top, and then we predicted once it's entered into the channel, we said that is going down. As you can see, the trend is bearish. But that's the technical side also. Technical always gives you a real price action, see what exactly happening in the market, because those are real money in and out. But there is another scenario we need to take a look at it before the earning. Whenever big earning, which are mostly all young generations, and they are more heavy into the tech stocks, particularly Tesla, because they like Tesla, and market maker knows all that most of the people who they do momentum trading, buying options, call option, because they always believe in Tesla, and they think Tesla earning going to be super strong, and just like everybody else, 101% agree, because they already said that it's going to be great, and we also knew. So everybody keep buying the calls. Now what happens is here, let me clean up the little bit here. So I took off, this is the Tesla stock, and as you can see, 1 week is right here. 21st was Friday. Normally that's the time when people enter. Last Friday, that time the price was $1,070 high. So most of the time people enter on Friday because they thought it's a good price, because next week is earning, so you have to buy weekly calls. Now when you buy weekly calls on at this price, $1,070, and then it touched down to $790, more than almost close to $350 down from here to here. So the people who buy when the price was here 1,070, they try to be in the money calls. When you buy in the money calls, means maybe $1,000 in the money, or $800, $900. They took down to $790. Now, these are not stock. We're talking about the options. So, options, what happens is uh, people think, oh, I'm going to make a quick money right here because Tesla always goes up on earning, and let's play the earning because this time earning going to be good. So let's talk here. So if you take a look at it, the current price is 852, but I just want to show you $350 difference from here down. If if you buy calls, if you buy $350 down, which is 850, 800, 700, 600, 500 a call, $500 calls a weekly, how much it costs you approximately. Let's take a look at it. So if you buy $500 call, yeah, here, it costs you $350, right? That $350 one contract, one call costs you. It's a lot of money, right? So let's go close to the, now these are all earning time. Earning time, if you take a look at it right now, how many calls are people have been bought? 3,000 calls after earning. Imagine at that time, they were not 3,000, they were like 15,000, 20,000, 23,000, 25,000. So if you multiply this price to that price, is each strike price, and these are all um, close to the share price, the current price. Imagine people who bought it, most of the people, they can't afford, because I mean they don't want to buy too much, so they buy out of the money call, which costs you $20, $30, $35, depends where it is. But normally it's like they do pay pretty much $25 to $20 a call, out of money call. So if you take a look at it here, what happened? People who bought it here, out of the money call, which is this price, $1,100 calls, they go, once the market drops, those calls will get almost like a 30, 40, 50% get washed out of the money calls on next day. Then constant 3 days going out. So some people enter here also, some people enter here. So let's guess on an average $1,000, because people think $1,000 is a good range to enter. So people do buy at that time, because the closer you go, the premiums are way higher. Whenever the earning date is in that particular week, the premiums are double. So what you see right now is not the real price. That time, this same call would be double the money, because that's how the delta works. The implied volatility goes up when the time comes nearby. So if you take a look at it, implied volatility is 72% here. That time almost 120, 100, like that. So if that happens, the premium price is also high. And then there's a bid and ask difference also. I'm not talking about that right now, but let's talk about this scenario. So millions and millions, probably billion dollar probably easily on that somebody can make, market maker can make, particularly that time when everybody's bullish, and how to change the wind at that particular time. So this is normally, those are the games basically play, because somebody to make money in a billions, what they do is they have to also change the trend. So what they do is they go here and they short it out. These are market makers, so they have this, they exactly can see all this data, everything. They can see how many calls at what price, how many people have bought, and how many people are in. They can exactly see all this data. When they see this, they see the honeycomb. When they see honeycomb, is a easy task for them to achieve. Why? Because odds is even, and this is how they normally play. I'm gonna just show you here. So if you see all these kettles, they are spreaded here, right? So if you want to bring them to the slaughterhouse, it takes a time to bring them to here, to that one by one. But if they are like these, just like one of, let me show you closer. So if they are like this, it's very harder to bring them to the slaughterhouse or bring to the, we call it like lock to walk. Once you are locked in, you can only walk, you can run. This one you got to run. It takes a lot of effort to bring them to the, called fence, log. Once you are locked in, once you buy the option, then you locked in. You are in. So every strike price is just locked in. So in this case is once you are locked in, you have a no moment. You have no way you can run around because you have a fence surrounded by, and you can't go because you already committed the contract. Once you commit the contract, when you buy it here, and then it goes down, then you won't be able to even sell because everybody has a greedy element that hey, I'm gonna lose the money, so I have a hope. So we always believe in hope. Most of the people, we live in hope in that you're gonna come back on earnings. So we should be fine. So by the time the earning comes, your premium price is goes way down. It's very then the gamma plays. So in this scenario, basically what we do is we lose all the money in these cases. So that was the game actually they played, particularly Tesla, because there was a lot of bull. They can pull out all the data, and they can see exactly how many people are bullish. They can also see all the social media and how many people are like bullish on that one also. So they exactly can see what exactly happening on that side. So this is how that's been played, and that's the main reason that happens. And let's go back to technical side also. Now what happened is in this case, if you take a look at it, let me clear this chart. This was the M pattern was following earlier. We posted, so I'm going to clean that. That's the bearish sign. Clear the M pattern. And then before earning, why I was bearish. I mean, so I try to clear. So if you can see this last 1 week is getting rejected from this resistance line every time. This channel getting back. This is the resistance. Is getting rejected from there. This time tested, getting rejected, right? Then it stays. So if you look at it here, rejected this time rejected, here also rejected, bring back. So if you look at this, every time stock try to cross the line, it cannot cross. So this is the higher, this is lower low, high, lower low. So it's getting lower low. So that means the trend is bearish right here. And then on top, the main resistance line broke towards down, and then we enter back into the yellow downward channel I created here, yellow downward channel. Once we get into the downward channel, and then we broke 100-day moving average right here. When we broke the 100-day moving average, that is the bearish sign. So what happens is 100-day moving average is what many analysts, they want to buy something, they always screen through, and when they screen, they don't want to buy something which is bearish, which is below $100 moving average. So Tesla went under the below 100-day moving average, and then that is one of the bearish signs. So I mentioned here, excuse me. If you can see this resistance I draw, that was the previous resistance, now it is support. So I draw right here, that's the major support. It tested here and bounced, right? Over here, it broke right through it. It broke the floor and it break that. It also broke this major resistance, major sloping support, which I draw from when Tesla was $65. That with the split price, $65 all the way from here straight line. That was the major support. When this breaks, is not a good. But that was the game plan for the market maker to wash everybody out when this break on particular earning day. That right on the Thursday, everybody's calls are washed out, and they make so $350 difference. So that time, most of the people buy the Tesla was $1,000, and you buy in the money maybe 950, 900 to buy. There are some people who believe in that it's not gonna cross below 200, so they buy it at this price also, but they pay healthy premium, $300 premium per calls. So that's a lot of money, right? They wash out everybody right here. And that was the real game was going on. We have to understand we can't just play the momentum. Every time I recommend stay on a side, particularly playing the earnings, because when you play the earning, what happens is all gambling is probabilities. Probability is not the confirmation. Even though we can do technical analysis, but technical also can wipe out when somebody has to, if there is a big force who is playing against you, then you can be the loser. So all these 99% people who think they can win, cattle cannot win, right? Even though they have the power, but they cannot win because they are locked to walk to slaughter. So these are all locked, 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 locked. They can be locked. So we need to learn out of that. We can't locked in just because there are so many people on social media say, oh, there's a 70% people are buying Tesla call. That means it's bullish. That's people wants that click. People have agendas, and those are being paid by the medias, and a lot of things. We got to be very careful. There's a analyst. They also, I would call them agent. They are agenda analyst. Their job is to just go and do their analysis to misguide people probably, or guide them whatever their agenda is, and based on that, people also think that way. So we can't be trapped. We have to understand that it's better to be on a side than taking a risk, because it's just like a putting your coin into putting all your money into the machine, and then you expect, you press the button, you expect that you're gonna win the lottery, you're gonna win. But one time, two time happens, not 10 out of 100 times. Maybe you win two time, three time, but you will be never winner. House is the always winner, and they are the house. So stop playing the uh, games, and always stay on a side, particularly on earning side. I would guide, because those are probabilities. Probability will not help us to win the race. I would better I would call it. So in this case, your technical analysis would not work or would not help, because the force, other side of the force, which is market maker force, is way immense. And when they bring this down, is it can wash out everything, right? That's why we can take a look at the technical, asking, oh, can you take a look at the technical, particularly on earning plays, because the force of the game is different here. So again, one more thing I'll guide you guys on a social media. There are different types of trader. One is like a investment, who wants to invest the money for a long period of time. There are some people who wants to just buy the options and then play a little quick money, momentum traders. And there are some technical analysts, they just see the supports and resistance, entry and exit. Those are daytime traders. So there are several types of traders. So in other words, what I suggest you is, like, we all know the football game, Super Bowl. So when the quarterback throws the ball, he knows he can only throw the ball, but he can't play the defensive, even though he doesn't have the ball, because he doesn't have that power. And same thing, who is in a defense or an offense, he can't be a quarterback, right? So in this case, some people, some traders, they post there on Twitters and social media, oh wow, Tesla call is this, Tesla call are that strong. They can be a momentum trader. They are in and out. Some traders, they just in and out in 1 hour, 2 hours, maybe 10 minutes, and they say they are bullish, they are long. So you think, oh, Tesla gonna go up. So all this sentiment creates the FOMO when you guys try to enter. So I would highly recommend stay away from that. Control yourself. FOMO is your biggest enemy. If you think you're feeling FOMO, don't enter, because that FOMO is the worst part in our life. Because the experience, I'm 20 years my experience, I'm telling you, FOMO is not good for our investment. That's our greedy nature we have. We should eliminate that. In fact, we should do opposite. When real fear is, that is the right way to enter. At least looking at all the technical, I would always combine three things. When you want to enter, always look at the technical analysis, because that is real money price actions, tells you when to enter, when to exit. Basically, that at least give you support. Plus, uh, fundamentals, we always look at the financial fundamentals, and based on that we decide with what are the EPS and forward EPS and cash flows and revenues. Based on that, we analyze uh, the company's fundamentals and their products and their future forecast. So that also helps you. But again, technicals and fundamentals can be overruled by easily by geopolitical, such as Fed comes and announce any policies, then all these technical supports, 200-day moving average, it can bounce, it can break. Your all these theses can ruled over. So that's why the major weightage we should give it to that side also. So those are the things we need to keep it in mind. We can't just simply, that's why I always say whenever something when we hit the critical zone here, critical zone, you can be bullish because we probabilities are hey, it's gonna bounce because many traders, oh we already broke 100-day moving average. This is 200 moving average. We're gonna bounce. Well, it did, but again, how much right here we are not that far, right? It can bounce, but again, you look, everything cannot be a straight line. It is higher high, higher low, higher high, low, higher high, low, right? So it's go up and down. It's just like our lifeline. We go to the hospital and the doctor put the machine, and if you see a straight line, that means we are dead. But our pulses goes up and down. That means we are we are alive. Same thing in here too. Market has to go up and down, up and down. So those are the uh, uh, trend goes in the market. But again, market maker play dirty game with the retailers who believes in hope, and these are the hopes particularly it's been built. So we got to stay away from that, and um, be on a side particularly earning. If you or control your foremost fear of missing opportunity, we think, oh man, I'm gonna miss, somebody already losing, somebody's getting most of the time in stock market, everybody say good about I made money, I did this. They never gonna post any message say how much they lost here or whatnot. So it's better to stay on a side. This is my way of teaching. Always look for that's why I always teach you top trading edge. Nobody talk about what I'm teaching here, that these are the way to go. I'm not talking today about more technical side here, but more about earning. People want to talk, oh, why Tesla went down. There are Fed announcement, but this was the pure play. This earning was a pure play. Um, I've been playing in many years in the market, and I blow out my account several times. Based on that, my experience, I'm telling you, options are the worst thing to play unless you experience. So if you want to learn, you can just play as minimum as you can, one options to just to learn in smaller side, and those probability when you lose, you realize that I was really right. Maybe the best way to learn is to minimize your loss and stay in the game, but read as much as you can, go through the channels, YouTube channel. There are many people who teaches you different thing, how to play momentum, how to play long term, how to play, but you have to analyze, you have to understand how everybody's thesis are different. Like I said, quarterback, football, he cannot be a defensive or offensive. He cannot play just like that. Somebody's strength is cannot be yours because your strength is different than his, right? So you need to analyze your inner, that what is your strength is, and then learn out of it. Just like in my thesis, I always teaches you that you have to master three things. You can't just master one and try to be a winner. Just like a fundamentals, people think, oh, fundamentals, complete fundamental is good and let's go and jump in it's gonna make, yeah, it can, the company can go maybe, but when it dips, you're gonna feel the pain, right? That's why you can't just simply go on a fundamental, because stock market doesn't just work on fundamental technical analysis. Also, you got to analyze, and if that gives you a real mirror image what exactly happening, because fundamentals can be good, but if you don't have the mirror image of these are the real projects and real money happening every day, right? And you think Tesla is best and you buy it at this price, I'm sure there are plenty of people who are holding the bags from here because they think Tesla going to be for $1,500. Well, it could go $1,500, $5,000, but we can live in a hope. Remember, the hope is our major factor we play. So we can, but now they are feeling the pain when the stock is here. And now if somebody tell them the stock going to be $700, how they gonna feel? Or maybe $500, how they gonna feel? Not good, right? That's the reason you got to take a look at the surrounding, such as geopolitical scenario, which is Fed now is talking about that $9 trillion, the bad assets they have to clear their balance sheet. $9 trillion. Nobody's talking here, but you got to go and do research, and you come to know what I'm talking about. That is a bigger. Still, they have to finish buying those assets they declared in 2020, and since then it's been buying. So in by probably summertime, they have to buy those $9 trillion. Nobody gonna buy those bonds, and those were junk. So maybe Fed would be end up buying those. Then they have to print all the money again. There'll be another good side, but I don't want to go into too much depth in this video. Um, but interest rate going to be raised, and they they said that it's going to be nimble, but they are scared that market can crash. But I don't think so. Market gonna crash right away like that, because there are little political things involved. When they don't want all the bank to go and sell at a one time and then the market crash. That can happen, but they have an inner connection with the banks, and their banks also don't do those. They don't allow to do that to control the market, because that could that can affect the ripple effect in the market, and everybody will be fearful. So they control that, though they're not going to come on TV and going to tell you, but they control in the chamber when they discuss with the banks, the Fed, bank, treasuries, politicians, Biden's, everybody involves in these, how to control the economy, how to manage the economy. So just to keep in mind, we're not going to go in depth in the same thing around here. Let's talk about the Apple here. Okay, so what happened to the Apple list? One second. So okay, so Apple again, same thing. The M Connect double top $183 rejected. We mentioned here that is trending down. It's gonna go down. People think Apple never go down. Well, yes, it did happen. What we said, because keep rejecting the resistance. Same thing what Tesla was doing, because of the geopolitical news was affecting, and it is this is overbuy zone. If you take a look at it, Apple, it was from here. Keep grinding. COVID time, it was $54 split price, and it went to $183. So there's a higher low, but this is an overbought zone. And then now market is clearing, and it tested 100-day moving average. If you take a look at the 1, 2, 3, 4 days, it's been testing the 100-day moving average, and then it jumped. Now let's understand the game here. I just described here. So what happens is, most of the time, as you know, Apple is like an elephant in the room. It's very hard to move. Now these mostly, just like a Warren Buffett, he holds a lot of apples, right? Just like that. There are many big investors they are holding. You will not find those many retailers or social medias they're talking about Apple. I'm gonna buy this call because I love Apple. I like these. But you're gonna see AMC, GME, those Tesla, you will see all these levers there. So market maker saw the opportunity here, that is testing the 100-day moving average less. Now this is what my thesis saying, that there is a oversold here, particularly this last week. So many people bought these. They bought here now. When they're selling, not bought, but momentum trader buy here all the calls. And now yesterday when it broke the resistance, this is the bullish sign. When it breaks, right, how far it can go? Well, it can go further up now, but there is no resistance right now here. Only thing, the resistance you're gonna see right here is somewhere here at $176 right here, right? $176 it can go. But again, we have to also look, all these resistance can be ruled out if tomorrow, just like Bank of America said on Friday, saying that well, we think my Fed might raise 7 time or 5 time interest rate. That is not a good sign if that happens, because every time interest rate they announce, market draws 5, 6, 7% announcement. They did not even started the announcement yet. Many people, so it's already priced in because this drop. No, I already look at the history. I'm not going to talk about it in this video, but that would be another video. But yes, so that will be a price correction coming in. So that's why I'm not right now super bullish, but sign they broke momentum. Yes, you can play momentum, but again, this could be a trap also, because every time the first this resistance broke, and those who are the first trader who try to trade this and bullish, and next week Um, Maybe Monday, Tuesday, they can take it up to here, and then they bring it down on a Friday right here. So all these bulls can be washed out on Friday. You get my point? If you buy it here, maybe 175, because many people don't get take exit. They don't exit. That's the problem. So you got to momentum trader. They benefit out of this the max playing the chart, right? But you have to understand you are a quarterback, or you playing defense, or you playing offense. What is your position when you play? That is most important part. Is so if you're not a momentum trader, then it's very difficult for you to judge and say, hey, now Apple going to be this and gonna go up. No, you can, because of the right now geopolitical is not looking good. When market condition changes, always better to be in a side position until unless particularly when something is momentum is building upwards, because very difficult, that could be a trap. And particularly I see a scenario in Apple that could be a trap setup here at 175, and then all these call can be washed out just like going up. And then you expect, if you don't, most of the people don't exit, they enter here. Some people are still waiting for confirmation. So that's the reason, if you want to play momentum, yeah, it looks bullish, but again, we don't know how things will be playing as the days goes. That's the reason I always, let me show you what I do. I always post my research and analysis. I always look at the fear ratio in the market. So you see that this is VIX, UVXY, and whenever I see these is going upward, that means the stock market is going down. Now the trend is VIX trend is down on a Friday, as you can see, is fell. It was up, then it fell, rejected from here, and now trying to break this. But again, this momentum changes. But I always watch bit by bit on a daily, so then we would know what's going to happen to Apple or SPY, markets. So I always keep eyes on that also, and I always post it. So if you subscribe, or best thing is follow me on Twitter. YouTube video I make them on a weekend or sometime in the evening time. So it's very hard for me to give you a fresh alerts on YouTube. But if you on Twitters, I highly recommend Top Trading Edge. You can go on twitter.com and search on it, Top Trading Edge, one word, and then you can subscribe, follow me on that, and then you get all these alert I post every time. So for example, SPY alert, time the market, SPY is the stage. So like right here, I mentioned here, broke the downward, still watching, it might can get back, because it can go back. So SPY is the major indicator in the market. Wherever the SPY goes, that's how all other stock goes with it. So my opening the chart for the SPY S&P 500 is the major indicators, which I always mark. Everybody follows that. So I draw this pennant, and then I was watching this pennant can break upwards or downwards. So I was watching this pennant because we're getting closer, and it broke upward, and I can show you it broke upward. So I wrote down here, SPY is heading into pennant to break upward, then bullish, or downward, then be bearish. So it was trying to trick you on a downward, but then watch the next one. Next, I saw this, I said, you know what? This is upward. So it rejected here, rejected here. This is the 5-day chart. 1, 2, 3, 4, and 5 days of work. 30 minutes, 30 minutes each chart. Each candle represents 30 minutes. And see, look here, it rejected here and then it bounced. Look at how fast it's bouncing. One green candle, boom. And then it broke right away, stacking on each other. So these are the dirty games market maker plays, and now it's bullish, particularly that day, because broke the resistance. I already posted here. If you look at my message, SPY reversal broke the major resistance. That time it was, what was the resistance price? 435, right? Look, the SPY closed. SPY closed for, no, that was a posting, and then SPY closed at 443, I guess. Yeah, 443 right here, 442.74 close. So that is a crazy run. That is a crazy run on it, particularly. Sorry. See, that's a crazy run. 400 and from here to here, cross trying to break the 200 moving average. In fact, SPY broke 200 moving day. So it's almost like a five. You got a $7 run if you have a SPY calls at that time momentum. You can make easily good money on those. So I always post those alerts on Twitter. SPY reversal broke major resistance. SPY next stop is for 40. Did break for 41, for 40, for 41. So that's what it happens. Same thing. I post all the alerts, some charts and all. So if you guys in the game, if you want to, know more about it, fundamentals, technicals, I always post the videos and I always teach them. You can ask me question anytime on Twitters, on YouTube's, on these channels. You can also, comment below. I will definitely respond you back on it. And I really, really, guys, appreciate being here. Please subscribe, like, comment, so at least because my video nobody knows, man. People search YouTube would not know what am I teaching because yeah, I'm just new. I just started my YouTube channel uh, 10 days ago. So if you guys can help me out, I would highly appreciate. Uh, I'm like I said, I'm trying to teach every steps what exactly happening. I make a lot of videos, everything. So that is a learning process. We all should smart and learn better ways so we can make a mistakes. There's a lot more things to learn in the life, particularly while trading, because trading is the place where 85% people lose the money and 15% people make money. That must be reason 85%. So we don't want to be those 85%. We want to be on a 15% side. That's what I'm going to teach here. There's a lot more to learn. So thanks for tuning in here. Until next time, thank you very much. Bye.